Information presented is for educational purposes only, and views regarding the economy, securities markets, or other specialized areas, like all predictors of future events, cannot be guaranteed to be accurate. Information does not intend to make an offer, recommendation, or solicitation for the sale or purchase of any securities.
Welcome, everyone. I'm Jason Nickerson, President and Chief Operating Officer at John G. Ullman Associates, and this is Meeting the Market. This monthly series is designed to keep you informed on the economic news, market developments, and trends shaping today's investment landscape. In each episode, we'll break down recent market activity, highlight key events to watch, and discuss what may lie ahead. With nearly 30 years in the financial services industry, my goal with Meeting the Market is simple: to provide clear, timely, and unbiased insights on what matters most, so you can stay informed and confident in a constantly evolving market. So with that, let's meet the market and get started with this month's episode. The biggest stories from this last week really started off with tech earnings and what looks to be the potential start of a software sell-off. This all was triggered by Microsoft shares dropping roughly 10% on Thursday following what some might consider a disappointing earnings report. The drop represented the largest single-day decline since March of 2020. What has been a focus to investors was a slight miss on cloud revenue by Microsoft, soft cloud guidance, but most importantly, artificial intelligence CapEx growth. The disappointing guides dragged other tech names down with Microsoft, most notably in the software area. Software-focused ETFs also dropped by 5% on Thursday. This all comes as investors are growing more and more sensitive to the CapEx spending of mega-cap tech stocks, whether or not companies will see the return on investment with this robust level of spending that is central to the artificial intelligence trade. And Microsoft's results last week amplified some of those concerns that could spread on a broader basis through the software and tech industry. Now, on the other side of the spectrum, Meta, formerly known as Facebook, was mightily rewarded on Wednesday by posting a strong advertising revenue number as well as robust forward-looking CapEx guidance. So stay tuned on this growing concern and future outlook for the tech industry. The other major headline that came about last week was that the Fed held rates steady, and we've potentially identified the next Fed chair. So for the first time since July, the Federal Reserve voted to keep interest rates steady at 3.5% to 3.75% in their January meeting on Wednesday. Now, there were a couple of governors, Stephen Moran and Christopher Waller, that voted against the hold. Both advocated for another quarter-point rate cut, and Moran, the most recent Trump appointee, had previously called for half-point rate cuts over the last several meetings. And when this meeting concluded, Jerome Powell now just has 2 more meetings left in his term as Fed chair. Trump has appointed his new Fed chair, Kevin Warsh. Now, Trump was the one who appointed Powell to the Fed chair position back during his first term. And in Powell's 8 years as Fed chair, he's had to navigate the COVID-19 pandemic, some of the highest inflation since the great financial crisis, and a series of public battles against President Trump, who put him in that role. The most recent of those battles coming earlier this month, as the Department of Justice opened up a formal criminal investigation into Powell and the ongoing renovations to the Fed headquarters and what appear to be cost overruns. Now, back to the nomination of Kevin Warsh, President Trump's choice for the next Fed chair, that came out on Friday. Now, Warsh served as Fed governor under President George W. Bush from 2006 to 2011, and also interviewed for the top job at the Fed in 2018. Trump ultimately chose Powell. Warsh has been critical of the Fed in recent months, arguing for a less restrictive policy in the face of artificial intelligence productivity and advances in those advances and transitory tariff price effects. Now, Warsh has been critical of Powell's handling of surging prices in the aftermath of the COVID pandemic. So we'll have to see what his stance is if he does, in fact, take office in May. when he would potentially relieve Powell as Fed chair. Now, Powell, as he'll no longer be Fed chair in May if this transition goes through, but he does have the option to stay on as governor going forward. There will be a confirmation process relative to Warsh, which consists of a hearing and a vote in the Senate Banking Committee and a full vote at the Senate level. Reactions so far to this nomination have been mixed, with some cheering the appointment, while others flagging a potential conflict of interest that could arise between Warsh and the president and the pressure to cut rates that could come along with that. Now, the week ahead, we have a couple of economic reports that should be on our radar. The JOLTS report, which is job openings and labor turnover survey, that will be released on Tuesday, February 3rd. The jobs report, which is non-farm payrolls and unemployment rate for January, will be released on Friday. And the preliminary February data for the Michigan Consumer Sentiment Survey will be released on Friday also. So pay attention to those and their at least near-term impact on the market. And then even further ahead, as we look back at the Fed and their meeting on March 18th and the potential for holding rates steady or cutting rates, the market is really pricing in just a very small chance of a quarter rate cut. Inflation and labor market data that will come out over the next several weeks will continue to be the focus and part of the consideration for a future rate cut as we start the year 2026 and look towards further Fed policy coming out beyond that. So with that wraps up this month's episode of Meeting the Market. We'll see you next month.
Thanks for watching. If you found this video helpful, give it a thumbs up and hit that subscribe button so you don't miss future updates. Looking for more insights like this? Head over to our website at jgua.com for additional resources. And if you'd like to talk about your personal financial goals, we'd love to help. Just click the Schedule a Meeting button highlighted on your screen to book your complimentary consultation. Thanks again for joining us. We'll see you in the next video.